All right, good evening, everyone. If someone can hear me, so if someone can hear me, you are welcome to the financial modeling class for August to September 2020. So so this is going to be an introductory class. So if you observe, I already sent a file on the group. I sent like about 3 files on the group. All right, so I sent 3 files on the group. So what we are to do normally, what we do is when we have a practical class like that, we send the files. We send the files in advance, so you can go through the file, check through the file, and see things that you are you are familiar with. Okay, then if you have questions, you can always note them down and ask. All right, so I sent this file. So this is actually supposed to be an introductory class, but what we'll just do is, for today, we are not really going to talk much. We're just going to introduce us to the basics of financial modeling, what financial modeling is all about. And we are also going to talk about the steps in modeling. That's modeling generally, and we'll look at some advanced Excel functions. So I already sent a note to the class, so it's advisable you have the Google Classroom. So try to download the Google Classroom and follow up with all class task. All right. Okay, so let's see what we'll have. All right, can someone hear me? If you can, that's great. So I will just briefly share my screen here. All right, so let me just explain what we have here. So basically what we have here is a financial statement forecasting model. All right, so we're just going to talk about a whole lot of things, but for this class, it's just an introduction. So we're not going to overemphasize what we have to say. All right, so this is a financial statement forecasting model. Now, the first thing, when we talk about financial modeling, what exactly are we talking about? Or when we say financial model, and what do we mean by a financial model? A financial model is simply it's not like a representation. It's a representation of a financial phenomenon. So what I mean is, when we talk about financial model, what it then means that we have some set of assumptions. So those sets of assumptions are input into our models. So when we factor in those inputs, we get an output. Now, why do we do financial modeling? We do financial modeling for a whole lot of reasons. Now, the objective of doing financial modeling depends actually on the type of financial models you want to build. For instance, if it's a financial reporting model, of course, you can use your financial reporting model to do your projections. All right. So like a 3-statement financial model. So when we want to do projections, when management wants to see what the result of future operations will be, they often rely on financial model. So a very good example of this is an integrated financial statement model, a 3-statement model. All right, so that can be used for projections. All right, so management can also use financial model for analysis. So apart from talking about projections, we're talking about analysis. All right, so when we talk about analysis, we're talking about trying to look at the financial indicators of future projections. When we look at financial implications of future projections, and based on that, management can take proactive actions. All right, so that's that aspect of analysis. All right, so we're going to take a look at a whole lot of it. So another use of financial model can also be said to be for merger and acquisition. When a company wants to merge with another company, it is expected that the companies to be merged will be valued. All right. So when we get to the aspect of merger and acquisition modeling, we'll see how this is being done. So we often do company valuation in a merger and acquisition situation. All right. So another reason could be for, of course, we measure merger and acquisition or takeover. All right. So we can also mention the fact that for a private equity firm or an investment banking firm, they often carry out what is called leverage buyouts. All right, leverage buyout modeling. That's LBO modeling. In LBO modeling, the investment bank or the private equity firm is actually looking at buying over a company by injecting with a combination of debt and equity. All right, so more of debt and less of equity. So in the leverage buyout model, the private equity firm or the investment banks wants to acquire a company, but in doing so, they're actually leveraging on them on debt. So they are leveraging on debt to purchase or acquire the company. And before that can be done, they need to value that company. So that is one of them. That is also one of the uses of financial modeling. So as I said, it depends on the type of model we want to. It depends on the type of model we want to build. That will what we give us a signal about what specific usage we can put the model to, or what the purpose the model can serve. All right, so that is it. So when we talk about, I will just quickly do a recap. When we say financial model is simply a mathematical representation. But in this situation now, we are restricting that representation to accounting form. All right, in which we are going to have some set of assumptions, and based on this set of assumptions, we're going to have output. So our output is represented in a financial. It could be a financial statement. It could be if it is a project finance, for instance, it will be like an investment appraisal output. Talk about NPV or the IRR. So majorly what we're saying is that for you to have a model, there must be an input. That is basic. For you to have a model, there must be an input and there must be an output. Your inputs are your assumptions, all right? While your outputs are the results of what? While your outputs are the results of your input. All right, so I'll take that again. Your input are your assumptions, your output are the results of your input. That's the processing of your input. We give you your output. So in this case now, your output will come in terms of in form of financial statement. Can come in the form of financial statement if it's a financial statement model. All right. So basically, most of the modeling that we have always starts from an integrated financial statement model. So oftentimes you will see that you are making assumptions, and once those assumptions are fed into the financial statement, you get your output. All right, so that's what we have for financial statement modeling. The definition of financial statement, the definition of financial modeling. I mean, so I've sent a note in class. I will also drop a voice note later on to elaborate on that. So basically, what we have here is an example of how a simple financial statement model will look like. So this is actually an integrated financial statement model. It's an integrated financial statement model. Integrated in the sense that if we look at the financial statement has the income statement, it has the It has the income statement, it has the balance sheet. You can see this is the balance sheet. It has the balance sheet, and it also has the cash flow statement. So that is why it's called an integrated financial statement model, because it has all the three statement model in one, and they are all linked. All right. So if I'm changing any one of these numbers, automatically the other statements will change. I'm changing any one of these, automatically the other statement will change. That is, talk about um, the balance sheet and the cash flow statement, in as much as they are linked. All right, so you should be aware that our cash flow statement is linked to both the balance sheet and the income statement. All right, so later on, what we're going to look at is, so later on, what we're going to look at is we're going to look at how to sorry. All right, can someone hear me?
Yes, yes.
Yes, we can.
All right, great. Okay, I just need to be aware of that. So if you can see the screen, just let me know. Can you see my screen?
Yes.
All right, great. So as I was saying, so I said this is an introductory class. You have the full lecture notes. I've actually dropped the full lecture notes in the Google Classroom. All right. So we are not really doing much today because it's the first class. So I just have to introduce. First of all, let me even I didn't even introduce myself. All right. My name is Wilson Izeko. All right. So I'm the lead instructor for this class. I'll be the lead instructor for this class. Okay. So I also have my team members. I have Promise, they may have Dorothy, and I have Chisom. So these other guys will also come in to lecture you on some of the aspects of this class. All right, so that's me. I'm a financial planning and analysis professional of over 5 years experience. So my experience cuts across both internal audit and finance. All right, so equally a chartered accountant with ICANN. All right, so that's just a brief introduction about me. So I do financial modeling. Financial modeling is what I have passion for. And so I'm glad to have you guys on board. So that's just a brief introduction of myself. I remember I actually didn't do that before I started. All right. So in the course of this lecture, we're going to be talking about a whole lot of things. As I've said, we're going to be making use of the company's annual report. We're going to be as practical as possible. All right. We're going to be as practical as possible, and we're going to solve a lot of examples and see a lot of scenarios, sensitivity analysis. We're going to do company valuation. We're going to do leverage buyout modeling. We're going to do merger and acquisition. We're going to talk about best practice in modeling. All right. So we really have a lot of things in stock. So, all right, but we don't have to rush things at the same time because understanding things matters. So as I was saying, so this is an example of how an integrated financial statement model will look like. And I've told you that one of the most important things that you must know how to do in financial modeling is basically how to build a three-statement financial model. If you cannot build a three-statement financial model, like you cannot build the income statement, the balance sheet, and let your cash flow statement connect to the income statement and balance sheet, you have not actually started, because that is the basic. So we're going to emphasize that, because tomorrow that's what we're going to do. We're going to build a complete integrated financial statement model. That is the basic. If you don't know that one, you may not be able to know any other thing else, because that's the foundation. So when you're talking about valuation modeling, M&A, LBO, you just have to know this basic before you talk about anything else. So I'll give you a note on that. You'll see how it looks like. So this is the income statement model. So I've told you that it's an integrated statement model because they are all connected. They are all connected. Now, at the same time, this is also a reporting model. Now, why do I call it a reporting model? I call it a reporting model because it is used to report your financial statement. You use what I say. What I say. It is used to report your financial results. Okay. So let me use the word financial results because this is a financial statement. So it's used to report your financial results or financial transactions over a period. That's why it's called financial reporting model. All right. So if you are an accountant, of course, you have a template you use in your office that you use to report your financial results, maybe on a monthly basis. Of course, on a monthly basis, it's for management accounting purpose. It's on a monthly basis. So it's when we talk about annual report, then we talk about, of course, we talk about yearly basis. So for management accounting, you do make your report on a monthly basis. So when you are reporting on a monthly basis. Most of us in our offices, in our different offices, we have templates that we use. So that plain template that you use to report on a monthly basis is a financial reporting model. It's a model. So the reason why it's called a model is because they are linked. That's basically if these statements are not linked, we cannot call it a model. So it's basically because they are linked. All right. So what I'm going to show you now is I'm going to show you something. Now, if you look at what we have here, now this is a trial balance, right? Now, in preparing our reporting model, all right, in preparing our reporting model, because what I'm going to do here is we're going to have this reporting model populated. I'm going to do one or two forecasting. All right, so it's just an introduction anyway. So this is our trial balance. All right, so this trial balance has been populated based on a ledger that's been pulled, maybe from QuickBooks, for instance. So we are pulling a QuickBook result, right? A QuickBook ledger rather. So in the GL, we have line items that makes up the GL. We have the sales, cost of sales, office expenses, depreciation, stuff like that. So of course, we can have all this. And what we'll simply do is, we group all of these items. We group all of these items together, and we call it mapping. So that's basically what we have done here. All right. Like for instance, if we take a look at this selling general and admin expenses, let me increase this. Sorry. So if you take a look at this, selling general and admin expenses, of course, a whole lot of things will make up selling general and admin expenses. So what we simply do is that if we have office expenses here, we have another expenses, maybe distribution. All right, so let me put something here. Let's say we have distribution expenses. All right, so this and this, we're going to group this and this under selling general and admin expenses. So basically that's just what we call mapping. In mapping, we are trying to classify different GL items that fall into the same class as one. So that's what we call mapping. So what we do in practice is when we pull our GL, in case the GL is not well mapped, all right, so most often times you may have multiple line items in your GL that you can actually group as one. All right, so you may have multiple line items in your GL that you can actually group as one. So that is the essence of mapping. So you should understand that mapping is very important. So that's the essence of mapping. So basically what we've done here is, I can say this office expenses, distribution expenses is mapped as selling general and admin expenses. Selling general and admin expenses actually covers the entire thing. Okay, it can be referred to as in this case now, we can refer to it as our OPEX. So in this case now, we can refer to it as our OPEX. All right, so we can refer to it as our OPEX. So that's basically what mapping is. Can someone hear me?
Yes. Yes.
All right. So that's basically what mapping is all about. I just need you to understand the basics. All right. So that is it. So we will map each of these things. Each of these will be mapped. And once they are mapped, we have a system format. Assuming we have a QuickBooks result here, I would have actually shown you how this looks like, but I believe someone is getting what I'm trying to explain. The mapping is you're trying to group each of the GL items together, group them as one. All right. So in this case now, I've actually grouped all the OPEX items as selling, general, and admin expenses. So whenever you see all of these OPEX, of course, we are going to have a whole lot of them, just that I didn't populate that. Everything is grouped under SG and A. All right. Now, the next thing you will now do is you're going to represent all income statement as IS and all balance sheet items as DS. That's exactly what we're doing here. All income statement is represented as IS. All balance sheet items is represented as DS. Fine. Now, this is a system format. It's a system generated format in the sense that you are not seeing it in the normal way. You see your debit here, you see your debit here, you see your credit here. Here, you are just seeing a single line, right? You are seeing a single line. So whenever you see negative, all these negative numbers are credits. Okay, you can see turnover is credit, income, interest income is credit. Of course, our accumulated depreciation is credit. So now for you to test that what you have done is simply fine. Okay, for you to check that what you have done is fine, what you simply do is that you have to add up everything here. So I'll add up everything here. All right. So adding up everything here, it must give us 0. So it's because it's picking the year. So we shouldn't pick the year. So adding up everything here must give us 0. So you can see this is 0. This is 0 here. So it must give you 0. So this is 0. All right. So year in, year out, you should have 0. You can see 1999, 2000, 2001, 2002. So this is actually on. Now I want you to get something clear. Can someone hear me?
Yes. Yes.
All right. I want you to get something clear. This is we have done this on an annual basis, right? We have done this on an annual basis. Of course, your income statement or your management account can be prepared on a monthly basis. What we simply do for a monthly basis is to take the movements. What I mean is that if you have January 2019, you have February 2019. All right, so this is necessary for management account reporting purpose. All right, so we have a figure for January. Let's say this is the figure you have for January, is here, and you have a figure for February as this. All right, so what you simply do is for the items that makes up the income statement, all right, you're going to look at the monthly movement. So here, what I'm simply going to do is to look at the monthly movement. And how do I look at the monthly movement? If I want to get the movement for February, so I'll represent February 2019 M. It's just simply going to be minus this, all right, minus this. You understand what I'm doing there? All right, so I can as well just open a bracket here, close it, and have minus in front of this. All right, so this will be my movement in the month of February. So what this simply means is that my sales in February is 16.8 million. That is what this simply means. All right, so this is a monthly movement. All right, so basically that's what we do for management reporting purpose. Or for your financial report, annual financial report, of course, that's on a yearly basis. All right, because on a yearly basis, it's going to be accumulated from January to December. So that's why we don't do movement, because it's on a yearly basis. Or if it's on a monthly basis, we have to do movement because we want to get it on a monthly basis. So I believe that's clear. All right, so that is everything about mapping your TB and ensuring that for you to prepare your management account to do monthly movements and stuff like that. So this is the first thing you need to do in your financial. So what we're talking about here is the fact that you need to get your income, your trial balance to be in a system format. All right. The trial balance must be in a system format. It's the first step for you to prepare a financial reporting model. Now, once that is done, we have here, we have something here. So what I'm simply going to do is I'm going to take out some of these numbers. So I'm going to take out some of these numbers, and there is something I need to explain to you here, which is very important that you need to you need to understand. And also we're going to explain some of the concepts. So some of the concept of the line items that we have here. All right. So I'm taking out some numbers. So if you check your if you check the file, if you check the file I sent to you, you see that most of all these numbers are already taken out. So that is for your own practice. It is very, very important that you practice. It's very, very important that you practice. Very, very important that you practice. All right, so great. So I've taken out those numbers rather. So this is an already formatted integrated financial statement model. All right, so tomorrow we'll look at how to prepare a complete integrated financial statement model. Because I told you that it's very important, very, very important. If anybody asks you, can you prepare a financial model, and you don't even know how to prepare an integrated financial statement model, you don't even know anything about modeling at all. So that's the basics. You should be able to prepare an integrated financial statement model. But because it's an introductory class, you don't want to go through that rudiment now. So what we can just simply do is have an already prepared integrated model, and let's see how we can prepare our reporting model. So basically what we want to do here is we want to do a reporting model. All right. But okay, so let's see how this goes. Now, when you want to do a reporting model, okay, there are different methods people use to prepare reporting model. Some persons can just take, some accountants can just take the trial balance here and use a pivot table, summarize the information. But seriously speaking, there's no point in using a pivot table here. And you know the reason? Because we have already mapped this trial balance. So why are you pivoting it? So we are not going to make use of a pivot table because it has been mapped. It has been mapped. So what we're simply going to do is we must check that the total of all the line items of the TB gives us 0. If it's not returning 0, then it is wrong. It means that your debit is not equal to your credit totals. All right. So so what we'll simply do here is that to populate our financial reporting model, we're simply going to use the SUMIF statement, SUMIF function. All right. We're simply going to use the SUMIF function. So there's something I needed to have explained to you first. So probably we'll just simply go there now. I'll pause here. I'll come back here later. But I need to explain some relevant functions we use in financial modeling. All right. So what I'm simply going to do here is I'm going to share my screen. Can someone still hear me?
Yes, we can.
Yes, I can hear you.
All right. So what I'm simply going to do here is I'm going to show you. I actually sent this file as well. Can you see the screen? Can you see the screen? Advanced Excel functions for financial modeling 1.
Not yet, boss. Not yet.
Okay, not yet. Okay, I think that's not shared. Okay, no. What I'm simply going to do, I'm going to share that again because I have to share that so you can see it. So, all right. So this is it. So you can see this now, right?
Yes.
All right. So what we're going to do here is important before we go into financial modeling. before we start talking about populating the integrated financial reporting template and also doing forecasting. This is important that we'll talk about it. So it's not for you to be good at financial modeling. It's not all of the Excel functions you need to know. So there are people that believe you need to know all of them. You can't. In fact, you can't even know all of the Excel functions. Even programmers, the guys that program Excel don't even know all of the functions. But what you must know is you must know the relevant functions that is applicable to you. You understand? So know the relevant functions that is applicable to financial modeling, and that's what we're going to talk about. These are not all the functions. If you check the outline I gave to you, these are not all the functions. But what is scheduled for today is to briefly talk about these three, what we have in these three tabs. All right. So we'll simply look at this now. Now the first thing we'll look at is the lookup function. Now the lookup function is very, very important. Very, very important. So we have to look at the lookup function. All right. So first let's look at referencing. Let's look at referencing first. So the first one we look at is referencing. Now, what do we call referencing in Excel? All right. So basically in Excel, there are three different types of referencing, right? We have what we call the absolute reference, the relative reference, and the mixed reference. Absolute reference, relative reference, and mixed reference. All right. So whenever you see any of these are cells, right? So let me explain what a relative reference is. A relative reference is a reference that changes as you move down, or scroll down in an Excel or on an Excel spreadsheet. So what I'm saying is, if I have something like this, for instance, so this is a perfect example. This is an example. All right, this is actually an absolute reference. So this is a mixed reference here. So if you look at the formula that is here, this is a table that shows items, different items, the unit price, the sales tax applicable to this price, and the line total, right? So for us to get the line total, we simply add the unit price plus the sales tax. This is like a value-added tax, 7.5%, right? So we're simply adding the unit price and the sales tax to get the line total. So now, if I drag this down, you can see that the reference is changing. This is C6D6. I come here, I press enter, and come here. This is C7D7. So it's a relative reference because it is changing. As I'm moving down the cells, it's changing. So that's why it's called the relative reference. It is not fixed. It's not fixed at all. Now, if you come to sales tax, you observe something here, all right? So if I double click this, I make this formula inactive, and I show you something like this. Now, what do you observe? You observe that there's a dollar sign here, right? Now, this dollar sign that is here is making cell reference E4 to be absolute or to be fixed. It's very important to understand this. So cell reference E4 is fixed because there is what? There is a dollar sign in front of E and in front of 4. So the column is fixed and the row is fixed. And why do we have to do that? We need to do that because in all of this cell reference, we are making reference to the tax rate of 7.5%. So if I double click this, you can see this is absolute. 7.5% is applied to the unit price. All right. So if I drag this down, see what happens there. So it's always referring to this 7.5%. Now, if I remove this, if I remove the dollar sign here and I also remove it here, and I have this, it's going to be okay. So I have this. So it's going to be correct for the first row 6. But once I drag down to row 7, I come here. It's not going to give me the correct answer. Why? Because I've made this cell to be relative. It's no longer absolute. For me to make this absolute, I have to put a dollar sign here and a dollar sign here. So this is what is correct. This is what is correct. So that's what is correct. Okay, so that explains relative and absolute reference. Now the next one is mixed reference. So mixed reference is actually a combination of both relative and absolute reference. All right. So in this case now, you are either making the row absolute and the column relative, or the row relative and the column absolute. All right, so we have a simple case here, a simple business case here. So the first business case is I have a unit price worth of SKU of a grocery item, 7 in total. I need to calculate the price of the item by applying a tax rate of 7.5%. Right? So that is the first case, which is this. All right. So the second case is I work in a company in which we have 3 levels of prices categorized into standard, premium, and deluxe. Recently, the marketing manager had announced that each of these prices attract a 10%, 15%, and 20% discount. Now, I need to prepare a table that will show the different applicable discounts. So in this case now, we're going to apply a mixed reference. All right, so how do we do this? If I double click on this, you see something here. We have the price level, standard, premium, and deluxe. We have the price, $100 there. These are the discount options, right? So the discount options here is we're taking this price, standard price of $100, all right? Now, we are applying a discount. By applying a discount, of course, you know we take 10% out of what? Out of 1. When we apply 10% out of 1, okay, when we take 10% out of 1 and apply it on the standard price, we have a discount for the standard price. So that's what we do here. So for us to apply, for us to make this to be correct, we need to fix the, what's it called now? We need to fix I, which is column I, that is 100, okay? And we need to make column, we need to make row 6 to be relative, because we are trying to refer to, we are trying to make this column. What it means is that this column remains constant. This column is not going to change. Are you getting me now? But the row is going to change based on the line item, based on each of these price level. So that is what that relative reference is doing for us there. So once I press enter and I take this down, so I have the correct answer there. So the same applies here. The same thing applies here. We are taking 50%, applying it on 100. And this time around, we are also making the, what's it called? We're also making this column to be fixed by putting the dollar sign. Now we're making this row to be relative. So that's what we call mixed reference. It's a straightforward thing. All right. Well, most often times in financial modeling, we may not be making use of mixed reference. It's that we are making use of a relative reference or an absolute reference. So you always see these two. You always see these two being used. These two types of reference being used in your modeling. All right, so that is it for referencing. Then for the lookup tool is also very, very important. Very, very important. All right. Now the lookup is of 2 types. We have the VLOOKUP and we have the HLOOKUP. V is vertical lookup, while H is horizontal lookup. All right. Now I have to make sure I explain referencing first before explaining lookup, because if you don't understand referencing, you may be finding lookup difficult. All right, so this is what we have here. We have a case. We have a simple business case here. I have a tax table that shows the various tax and tax base. Okay, that shows various tax. That shows various taxes and tax base. How do I? Okay, so how do I return the tax rate given specific tax basis? All right, so this is just what we have. It's just a simple pay-as-you-earn table, right? So we have the different tax rates here. All right, so what we'll simply do here in this second table is that we have picked the relative numbers, because Excel cannot recognize what is here. Excel cannot recognize these ranges. Excel will only recognize this. All right, Excel will only recognize this. But we've been able to pick this out of this. All right, so by simply saying in the first range, we have 0. In the first range here, we have 0. And we put the 0 here. From 0 to 9,999 Naira. All right, so let's say this is in Naira. Right, so that's in Naira. So we have 10,000, we have 30,000, and we have 100,000. All right. So these are the applicable tax rates here. These are the applicable tax rates based on what we have here. Now, so what we want to do now is we want to apply a VLOOKUP. We want to look up each of these different income level, and we want to see the applicable tax rates. All right. So now, when you want to apply VLOOKUP, it's in two ways. Okay. Now you apply VLOOKUP either by specifying true as the syntax, the last syntax, or specifying false. So whether you're going to specify the last syntax as true and false actually depends on what you are looking for. Okay, it depends on what you are looking for. Now, if you are looking for an exact match, if you are looking for an exact match, you specify the last syntax as true. While if you are looking for an approximate match, you specify the last syntax as false. All right, so I'm going to show you how that is done. All right, so is either you use false. Now you should take note of this. When I say false and I say 0 is the same. All right, so false can also be represented with 0. And when I say true, and I say true and I say 1, it is also the same thing. All right, so you should take note of this. False, 0. True is also 1. All right. So in this case now, here we don't have anything here. So we don't have anything here. Okay. We are as well saying that. Okay. So let's do this. Now let's say I have VLOOKUP here. So I'm going to look up this right now, the tax table, right? Okay, so I'm going to say, of course, this is first, second, right? That's 2. Now I want an approximate match. That's 0, right? Approximate match is 0. I press enter. So it means that here it's going to be false. Don't mind me, I'm changing the, whichever way it is. What matters is we are getting the logic right. All right, so this is an approximate match because it's 0 that is here, and the same thing as false. Remember, I said 0 is same thing as false. All right. Now, I want you to take note of something here. If I double click this, you will see that there is something here which is what lookup. This is a lookup, right? That's the lookup. Now, why do I have lookup there? It's because I've actually named this entire table as lookup. I've named this entire table as lookup. So I want to show you how to name a table. How to name a range. It's very important you know how to name a range. So you can see that we are talking about name ranges now. So how do you name a range? Now, first of all, I have to go to my formula and go to my name manager. So go to my name manager. So and actually delete all the names I've created. Okay, so I've actually deleted all the names I've created. All right, so there are different ways you can name a range, right? But we won't go through all the different ways because we don't have time for that. So we have a whole lot to do. What we're going to do is to tell you the quickest way you can name a range, the fastest way you can name a range. So what's the fastest way you can name a range? Let's say you want to name, can someone hear me?
Yes.
All right. So
Yes.
what's the fastest way you can name a range? So let's say you want to name this entire range. You want to name this range, right? What you're just simply going to do is just highlight everything and come here and say tax underscore table. Now note that name range does not recognize space, so that's why I'm putting underscore. You cannot put tax space table to recognize it. So you have to use underscore. So tax underscore table. That's all. That's all. There's no magic about it. So it means this has been named as tax table, right? Now, if I come back here, lookup, Excel is no longer recognizing lookup because I've changed the name of this table, tax underscore table, and not lookup. So what we're simply going to do is to come here and say tax underscore. So the name is out already. Tax underscore table, and I press enter. So immediately I press enter. I should be able to have the value. Okay, immediately I press enter, I should be able to have the value. Okay, fine, I'm getting not available. I will explain why that is the case. All right, exactly. So I have this. Now, let me explain something here. You can see Excel is returning not available for some of these values, and for some, just one of it is actually giving us the actual tax rate, which is 34%, right? Which is what? Which is 34%. So what we're simply going to do here is very straightforward. Now it is because we actually specified that this is false. Are you getting me now? Because we have actually specified that this is what? This is false. So that's why we're doing this. So Excel is not actually seeing these actual numbers here. So that's why it's returning not available. Okay, so that's why it's returning not available. So what we're simply going to do is we can apply the if error function to take out this not available. So what we're simply going to do is we're just going to say the if error. So I'll put the if error here, and I'm going to say Excel, instead of returning not available, just give me 0. All right. So once I press this, you can see. So instead of returning not available, Excel will simply return 0. So if I drag down, you can see that Excel is returning 0 instead of what? Instead of not available. So that is what the if error does. So the if error actually lets you what's it called? It lets you replace an error with a specific value that you have determined. All right, with a specific value or a character that you have determined. I mean, as well, just say no. I mean, as well, just say no values. Okay, so if I say no values, you can see that it's in character now. So that's why I'm putting it in quotation, because it's in characters. So I'm putting in quotation. If I say no values, see what happens there. So Excel is going to tell me no values. So I can copy this formula and paste and paste. Okay, so when I'm pasting by functions. So when I paste by functions, Excel is going to return no value, no value, no value, and no value. So that is what that means. So that's for false. But for true, I've told you that for true is going to be 1, right? True is going to be 1. All right, so this is not going to recognize because we need to also change the name that we have here. So we need to change this name. All right, so we've actually changed the name there. We've actually changed the name there. So you can see what happens now. You see what happens for true, because we're having something that is approximately equals to. Okay, so we are having something that is approximately equals to. Sorry, let me correct the statement here. All right, true is approximate match, while false is exact match. Please, I'm correcting the statement there. True is approximate match, while false is exact match. Please, I'll have to note it here. So I'm going to put a comment here. So this is please take note of that. So this is exact match. Please take note of that. This is exact match, while this is what? Approximate. Please take note of that. Approximate. So why this is approximate match? So why this is what? So why this is approximate match? So please take note of that. Thank God that I have to correct that. So now, this why this is approximate match is because when you take a look at 9,999, can someone hear me?
Yes. Yes.
All right. So when you take a look at 9,999, you can actually see 9,999 here. Okay. But if you can see 9,999, of course, you'll be able to say a value is before 9,999. Now, which value is before 9,999 here? There is no 9,999, right? But which value is before 9,999? Of course, it's 0. So 0 is before 9,999. At least you start from 0 before you get to 9,999. And that's why this is returning 15%. 15%. Right? So if this was to be 5,000, because actually we cannot have a 0 level of income. If this was to be 5,000, see what happens. So I'm putting 5,000 there. So you can see that 5,000 is still what? It's still 15%. because it's within the range of 0 to 9,999. So that's an approximate match. Okay. If Excel cannot see the exact match, it will return a number that is closest to that number. So please take note of that. So that's what we have. Now, for this particular table that we have here, this one is just showing the value in product ID and also product prices. Okay, so basically we have applied, we have named the product here. There's a naming here, product ID. So that is why this is returning a name. Anytime you see Excel returning hashtag name question mark, it means there's a naming error. So what we're simply going to do is we're going to name this product underscore ID. This product underscore ID. So once you name this product underscore ID, you name this product underscore ID. All right, so you can see that it's correct now. So that is it. All right. Now the last one is our HLOOKUP. HLOOKUP is horizontal lookup. I told you that. Now horizontal lookup is used to look up a table that is in horizontal form. This is vertical, right? This is vertical like this. While this is horizontal. So you cannot use VLOOKUP here. So this is a case study. I have a list of markets grouped. I have a list of marketers. Okay, I have a list of marketers grouped into A, B, C, and D in an horizontal table. How do I look up the value? Very simple. Okay, what we simply do is that just use the HLOOKUP function. So the HLOOKUP function is going to pick the marketer A, HLOOKUP. All right. Now you pick this entire stuff, this entire table, and you make it absolute. Very important that you make it absolute. Okay. So you're looking up for the sales. The sales is in the second row. That's why we have 2 here. Okay. And you want to make it an exact. Please note my words. You want to make it an exact match. That is why there is no 0 here. Is either I have this to be blank, or I say 0. Either way, it's going to be the same thing. You can see by typing 0, it should come to exact match, right? So that's what we have. That's what we have there. All right. So that is it for HLOOKUP. Okay. All right. So just know that when you see false is exact match and true is approximate match. All right. So that's important. All right. So that's what we have for lookup, name range, and if error. All right. Now, for some if and some ifs, this is another very important function. All right. Now, what do we use some if to do? Some if is used to return a value in a situation where we have only one criteria. Now, we are setting only one criteria. We use some if. Okay. Based on this criteria, we are telling Excel to sum up some values. Now, if we have more than one criteria from 2 and above, all right, we use some ifs. That's what it means. So let's look at this. It's a simple table. We have a case here. We have class, student, quantity of X, and quantity of Y. So this is actually consumer preference. The consumers are high, middle, low, and high, right? Now, this should be consumer. All right, so you can change that in the file I sent to you. So this will be consumer. So we have these consumers, we have quantity of X, quantity of Y. All right. Now, we want to use some ifs here. Now, if I click this and you see the syntax of the function, the syntax of the function simply says some if. Now, okay, some ifs, we have the entire table. Let me just take it out so you see what I'm doing. Now, I will say equals to some if. Okay, so the range is the entire table. All right, so everything here is the range. Now, the criteria I want to define is Wilson. All right, and the sum range I want to define is the quantity of X. Straightforward. So that's pretty straightforward. So if you add up 50 for Wilson here, and you add up 80 for Wilson, you have what? You have 130. So that's exactly what you have here, 130. So that's what the sum if is used for. But when you want to say sum ifs, you are defining more than one what? More than one criteria. So let's use some ifs here. So what I'm simply going to do is I'm going to say some ifs. I'll open the brackets. Now the sum range is still this. All right. There are two different, more than one criteria, right? Now the criteria 1 is going to be Wilson. Are you getting me? So that's for criteria. Sorry, criteria range, not criteria, but that. So the criteria range 1 is going to be the entire value we have here. Okay. Then the criteria, that's the criteria 1, is going to be Wilson. All right. Now the criteria range 2 is going to be all the class here, and the criteria is going to be high. Okay, so that is exactly what we have there, 50, 50. So that's what we have there, 50. So Excel is actually returning 50 here. So that's what we have there. So we have 50. So because the I, what it means is that, you know, we have selected here as high, which is the criteria range 2. And high is only applicable to Wilson once 50. You see now? So this is what Excel picked, which is absolutely correct. All right, so so that's what we have. That's what we have. So it's important you understand this. It's important you understand these 3 different functions. So what you will do on your home part is after this class, try as much as possible to practice them on your home. The empty file has been sent out to you. If you don't understand anything, because this class is going to be intensive, we actually don't have time, and we have a whole lot to cover. So it's going to be intensive, it's going to be fast, and at the same time, we want people to be carried along. So if you don't understand anything, please ask questions. All right. So that is it for all this. Now, so what I'm simply going to do again is to go back to. Now, can you see this? Can you see the screen? Can someone see the screen?
Yes, yes.
All right. So, so what we're simply going to do now is let's now go back to our original. Let's now go back to our original question. So what we're treating. That's why I said that there are some key functions you need to know. Not all the functions in Excel you need to know to be very good at financial modeling. You can be learning to advance yourself in more functions that is relevant to finance and accounting, but not virtually all of them you need. So we'll be going to the relevant functions. So we're going to apply the sum if function here. That's why I have to explain it using that that simple example. All right. So we have the TV for year end 1999 to 2002, and we have the financial we have the financial statement, right? So what we're simply going to do is we want to populate this. Okay, we want to populate this. Now, there's something I need to explain here. In any financial modeling, right? Any financial modeling, whenever you see a color, it's often advisable that you specify what is a formula and what is not a formula, what is hard coded and what is not hard coded. So all these ones you are seeing in brown, they are formularized, okay, while the ones in black, they are hard coded. Are you getting me now? So some financial modelers will just have maybe another sheet here, maybe like an introductory sheet. They can put the sheet here. Sorry. So they can put the sheet here. So this is going to be like an introductory sheet where they will explain what is hard coded. They can just say hard coded. Okay, so hard coded is this. Hard coded is this. No, sorry. Hard coded is black, right? Hard coded is black. Okay, hard coded is black. Then formularized or formula. Formula is brown. Formula is brown. So when you see this, what it simply means is that in case you want to edit this model, okay, you want to change or do some things on this template, you don't delete formulas, all right? So you only take out your hard-coded numbers. That's what you take out. So you can see all the formulas are still there. All the formulas are there. So I told you that tomorrow we're going to see how we're going to build an integrated financial statement model. All right, so what we'll do here for our reporting model. So this is a reporting model now. Those of you who are financial accountants in the house. So this is a reporting model. So what we're simply going to do is we're going to build this up, right? Now, we're going to come here. We're going to come here. Here we have our turnover, right? We have our turnover here. We have our cost of sales. After our cost of sales, we have our gross profit. Now, this has been formularized. I need to know something here. Now, there are different ways you can formularize an income statement in your financial model. All right. So basically, what I always do for me, what I always do is I always represent all of my formulas with a plus. I always represent all of my formulas with plus. So it is now the input to that formula that will be changing. I don't know if someone understands what I'm saying. Now, normally you to have your gross profit is supposed to be your turnover minus cost of sales, right? But I'm putting my gross profit as turnover plus cost of sales. What it simply means is that my cost of sales here is going to be negative, because if you had negative plus positive, it will be negative. That's just what I mean. So it's more convenient for me to be having plus sign in all. Then I can now be changing what is here as either positive or negative to determine what my value will finally become. So that's what I mean. So what I'm simply going to do here is I'm going to use sum ifs. So please, you should follow this. So I'm going to say sum ifs. Now, when I say sum ifs, I'll come to my trial balance. So this is my trial balance. Now, there's a syntax there already. Sum ifs. Now, sum ifs, that's the sum range, right? So I'll pick my trial balance, and here I have my sum range, right? So this is everything. So this is my sum range, right? So I'm going to say here, I'm going to say comma. Are you getting me? So the next thing you're going to do is your criteria range. Now, what's your criteria range? Criteria range 1. So criteria range 1 is going to be everything that you have mapped all these things. So everything you have mapped is going to be your criteria range 1. All right. The next is comma. Now the next thing is your criteria range 2. Now your criteria range 2 is going to be whether it's an income statement item or it's a balance sheet item. So what is in your balance trial balance? Is it an income statement? Is it in the category of income statement or in the category of balance sheet, right? So you're going to pick everything that is here as your criteria range 2. All right. So next is you're going to set your criteria 2. All right. So your criteria 2, because we are dealing with income statements. Because we are dealing with the income statement, our criteria 2 is going to be IS. Right? Our criteria 2 is going to be IS. And that is it. And that is it. So just press enter. Sorry. I've missed. I've entered too many arguments in this function. Okay. Okay, let's see if we have not missed anything. Sum ifs. Okay, criteria range 1, criteria range 2. Okay. Okay. Okay, so sorry, let's do this again. What happened? Something is wrong. Okay, so we're going to have sum ifs. So for our sum ifs, the first thing is the sum range. So the sum range is this. So we have the sum range. All right. We have the sum range. Now we have the criteria range. We have the criteria range. Okay, I've seen where the issue is. So the criteria now, we didn't select the criteria. We didn't select criteria 1, so that's why it's not returning the correct value. So we need to select criteria 1 by going to the financial statement and select turnover. So that's criteria 1, and criteria 1 is going to be a relative reference. Okay, so that's what we do. Then we'll now go back to the trial balance. Go back to the trial balance, and we'll select criteria range 2. Then we'll select, we have our criteria. We have our criteria. Okay, so what you're not going to do is you have to make this to be absolute. You have to make this to be absolute. Remember when we did absolute, right? You make this to be absolute, make this absolute, and also make this absolute. Okay, so this is going to be relative. All right, this is going to be relative. That is the criteria 1. Okay, criteria 1 is going to be relative. So we're not going to touch that, and that is the B15. So this B15 is going to be relative because it will be changing. That is the item you see on the income statement, the line you see on the income statement. But this one is going to be absolute as well. It's going to be absolute, absolute, absolute. So absolute fixed is the same. Enter. Okay, so it's correct now. So that's what we have. That's what we have. So you can see this is correct now. So what we're going to do now is you just need to set it up just once. Just set it up just once. That's all. You don't need to stress yourself at all. So what you're simply going to do next is just take this one down. Just take it down. So once you take it down, it automatically picks. You can see it's because this is relative. That is why it's picking cost of sales now. So it automatically picks the cost of sales. It picks the cost of sales there. All right. Then you can copy and paste. Now when you are pasting, paste by formula. So you paste by formula there. That's great. Then here, you also paste here by formula. Okay, so you are pasting by formula. Make sure you don't touch the formulas. You're only pasting in those ones that is hard coded. All right. So actually everything is formula here, but why we need to separate that is because these are calculated from, if assuming you don't have the trial balance, you would have seen this as hard coded. You understand? You would have seen it as hard coded. So what we'll do next is it's still the same thing for all the income statements. It's going to be the same thing for all the income statement, lines. Okay. So that's what you have. Now, once you have this, you have to take note of something. You have to take note of something. And what do you need to take note of? Can someone hear me? Can someone hear me?
Yes, I can hear you.
All right. So you need to take note of something. And what do you need to take note? Take note of the way the numbers are structured. Turnover should not be what? Turnover should not be negative. The reason why turnover is negative here is because in the trial balance, it's a credit balance. It's a credit item in the trial balance. That's why it's negative here. But you cannot have this as negative on your what? You cannot have it as negative on your financial statement, right? So what you're simply going to do is to make it positive by putting minus in front of this. All right, so this is correct. Now here, this is going to be negative, right? So there will be minus in front of this. Exactly. So this is what is correct. All right. So so what is the formula we have actually applied? I've told you that all the formulas, I always apply plus in all my formulas. So it means what I need to change is the nomenclature. I need to be changing the nomenclature here. So this is supposed to be negative. So that's supposed to be negative, which is correct. So this is also supposed to be, if you check what is here, is an addition, this plus this. So actually my EBITDA, okay, my EBITDA, after I remove my operating expenses from the addition of gross profit and other income slash expenses, this is actually a net off between other income and other expenses. It's giving us 56.8 million. All right, so we have EBITDA, depreciation and amortization 99.4. Okay, it's also negative. Also negative there. It's also negative there. So we have EBIT of 795.8, right? Now income Interest income is positive, is correct. Interest expense is negative, absolutely correct. All right. And we have our pre-tax income. So when you add these and take away this, we have pre-tax income of this amount. Now we have income tax. Income tax is also correct here because it's negative. All right. So that is what we have there. That's what we have there. So what we're simply going to do here, what we're simply going to do is to populate all this as well. So we populate for 2000, populate for 2001, populate for 2002. So the same thing applies in each of these cases. So exactly the way we have done this, the same way we will do this. So what we can simply as well just do is we can take this down like this. All right, we can drag this down like this. But in doing that, you have to change the reference because something is going to change here. Something is going to change here. All right, so you need to change something here. We have actually made this to be absolute. We made this to be absolute. All right, we made this to be relative, right? And we made this to, let's see what we can do there. Let's see what we can do. Okay, what you can just simply do is not to waste much of the time. You can just repeat what you have here. All right, you can just repeat what we have. What you have. Just repeat what you have here. Repeat the same formula here. So at least you have it for just 1, 2, 3, 4, right? That's for 4 historical years. All right, so you can just repeat that, and you have that number. All right, so that is it for historical results. That's it for historical results. Now, what should we do for the balance sheet? Now, for the balance sheet, it's very straightforward, right? It's very straightforward. So you copy this. The only thing you're just going to change for the balance sheet is once I have this. So the only thing I'm just going to change for the balance sheet is just to come here and change this to BS. I'm just going to change this to BS. And I'll have my value for the balance sheet. I should have my value for the balance sheet once I change this to BS. So except something is wrong. So we have to look at what is wrong. All right. So we need to look at what is wrong. So if you check the trial balance, let's see the trial balance. Cash and cash equivalent is actually 26, right? So what could be the problem? We check the cash and cash equivalent is actually 26. So the next thing is, have we done the right thing? Okay, let's see what could be the issue. Okay. All right, so let's see if we can actually define. So let's see if we can actually define this. So if we define this again, okay, we pick our, what's it called? That's actually supposed to give us the same. So we pick here our sum range, all right? Now we pick our criteria, that's this. So I have to do this again. Financial statement, we pick this, right? Then we go back here, we go back to the trial balance, we pick all this, right? Then it's a balance sheet.
Oh. Hello?
Item. It's the balance sheet. Absolute. Non-direct. It's the balance sheet. Okay. It's actually faster than with absolute. Absolute. For some of you that can use F for align everything here, it's actually faster than absolute. Let's see. Okay, something is fundamentally wrong here because this is actually supposed to pick this value. All right, so what I will do is I will look into that. I'll look into that. But the basic thing you need to understand here is for the mapping, it's very important that you know how to map. So it's very important you know how to map, know how to do your mapping. Very, very important. So that's where we'll end it for that. So what is here is a common size statement. The common size statement that we have here is basically used for forecasting. We want to determine our forecasting factor. What we must ensure that we do is to do, first of all, do a common size statement. So when we do a common size statement, right? Do a common size statement or by taking historical average. Of course, most of us know how to do common size statements, right? It's very easy for you to do common size statement. What you're just simply going to do is all the elements in the financial statement, take it over the turnover, okay, and find the percentage. So once you take the percentage, is this percentage number that is applied on this class. All right, so we're going to see how we're going to do all this. So I don't want us to overemphasize it for now because this is supposed to be an introductory class. So in our next class, which is tomorrow, we're going to see we're going to go further on this. So I'm going to send you a complete case study on this question. I will look into the formula on the balance sheet and send you a complete case study of this question where we're going to prepare a complete financial statement model. And tomorrow, what we're also going to look at. Can someone hear me?
Yes, you can hear you.
All right.
Yes.
So tomorrow, what we're also going to look at is we're going to look at how to prepare an integrated financial statement model. All right. So I will look into the formula for the balance sheet, and I will communicate the final output. I don't know what's wrong there. So, but I will look into it, and I'll communicate the final result to you, a complete statement that shows the populated numbers. All right. So tomorrow we'll look at integrated financial statement model. Consider integrated financial statement model. All right. So that's all for today.
Yeah, but mine is working now.
Yours is working.
Yeah.
For the balance sheet, right?
Yes.
I don't know what's wrong. Maybe it's my Excel or my form. I don't know. Sometimes Excel misbehaves. Sometimes. Anytime I have issues with Excel like that, I'll just leave it. Excel has its own way of misbehaving sometimes.
Sorry, Mr. Wilson.
Who is that?
Hello, Mr. Wilson. Hello, can you hear me?
Please just hold on. I don't know why I can't hear you. But just
okay.
Mr. Wilson. Someone wants to ask you a question.
Speak. Okay,
yes,
please go
I
ahead.
can hear you.
Okay, yeah. Sorry, please. I just want to just say, as regards the Zoom settings, many a times I've been logged out. I'll just be logged out. So when I come in again, when I log in again, you will have jumped to another, illustration. So I guess you guys should work on. Please, you guys should try and work on the timing. Probably you would extend the timing for the Zoom, like in the Zoom settings, because most time we just log in. When we log in, maybe as we are listening to the lecture, then I'll just be logged out. Then when I come in again, you will have moved to another stuff. So like
Okay.
today's class now, I couldn't really follow through. So I really need the loss today, and I didn't want to be calling you back, you know. So
Okay, I see. Apologies for that. We'll look into that.
please,
Look into that.
just so I will not at least from tomorrow. When it's 5, we'll just be able to, we'll just log in and we'll be done.
Actually, I actually logged in before 5. I actually started the class before 5, but I think it's network.
Yeah.
You know,
Yes. Because
network. Sometimes once network is not good.
Yes, I understand. Yeah, me too. I've been trying to since around 5. I was trying to log in, but I couldn't just access and everything. But no problem. Probably by tomorrow, hopefully tomorrow should be better.
Yeah, tomorrow should be better. Thanks. Yeah, is there anybody with a question? Any other person? All right. In the absence of no questions, I have dropped a note, an introductory note on Google Classroom. Please try and download Google Classroom and get the login ID.
Hello, Mr. Wizzy.
Yes.
Can you hear me?
I can hear you.
So, all these financial statement, common size statement that you put up here. How do we prepare it? Like if you want to do it from scratch, because you are just coming up with the prepared statement already. You understand that you are only showing the formulas and how to fill the statement. So how do you prepare all this?
Okay. So these are okay. Thanks for that. These are I started the class. I said this is an introductory class. This is the first class. So what we just see is an overview of what will be discussed. Exactly. Tomorrow we're going to build an integrated financial statement model. We're going to build from the scratch.
Okay.
So what we're basically talking about is this financial statement model. You need to build all this from the start to finish. Building cash flow, build everything. Yeah, of course. Now that's integrated. It's part of what we're going to talk about tomorrow.
Okay, no problem. Because it looks somehow to me. I was just looking when you were explaining it then, but now that you've clarified it, I think I'm okay.
Yeah, this is an introduction. We've not actually. Even I'm not even supposed to talk about this now. We're also supposed to talk about definition of model. Just do the theoretical aspect first. But you need to understand that before this one. So what we're talking about, what you just said is an integrated financial statement model. How to prepare the income statement, the balance sheet, and the cash flow, and link the three. Then once we link the three, then we now prepare our common size statement. We have everything blank and we prepare from start. I understand what you're saying.
Okay, no problem. I'm fine. I'm okay.
Yeah.
I'm okay now.
So,
yeah. Thank you.
Yeah.
But please help us to send the recorded video on time. You understand? So that I can also go through it.
No, it's not a problem. I'll do that. I'll also send the lecture for tomorrow, the one we're going to build from start.
Okay.
It's still going to be this. We'll just build this one from start because there's a complete case study on this we're going to look at.
Okay.
So we'll build this from start and we'll work on that case study tomorrow. It's a case study. It's actually a long question, but I just have to take the prepared one. So we'll just look at it. It's just how to be, once you know how to prepare your cash flow statement, your balance sheet, it's very simple. It's just for you to know the formula to apply. That's all. All right. So thank you very much.
Okay. Thank you.
All right. So the recorded video will be sent in case you miss the class. You can always refer to recorded video.
Okay. Thank you for the class.
All right. Thank you. So please refer to the Google Classroom. Check the Google Classroom for the notes. I dropped the notes on the Google Classroom. Yes. All right.